Welcome to episode 26 of Sean's Take on Asia, where we touch on the latest news on digital asset development and policy updates. I was under the weather a bit upon my return from Japan Fintech Week, and so in this slightly longer episode, we'll cover key events from the past few weeks. The inaugural Japan Fintech Week was a prominent event that showcased the latest development and innovations in the financial technology sector within Japan. It served as a platform for industry leaders, entrepreneurs, investors, and policymakers to come together and discuss emerging trends, opportunities, and challenges in the fintech landscape. There were several events that took place during the week, including FinSum, which focused on traditional financial institutions, Japan Fintech Festival, which focused heavily on digital asset-related topics, JFSA Blockchain Roundtable, which was hosted by the regulator to dive deep into policy-specific discussions, and the DeFi Retreat, which was well attended by domestic Japan institutions and institutional participants. I hosted a regulator breakout session during the retreat on the topic of self-hosted wallet with an audience of regulatory representatives from Japan, Thailand, Taiwan, and Hong Kong. I'll be sharing some thoughts on the state of Web3 in Japan in a Forbes article, to be published soon. Now, we move to several policy-related news in other parts of Asia. We start in Thailand, where its cabinet approved a tax exemption for crypto earnings to encourage fundraising via investment tokens. Under the exemption, holders of investment tokens that had already paid the 15% capital gain tax withheld don't need to include the profits when calculating their income tax, essentially ending a scenario of double taxation. This comes on the heel of multiple progressive developments in Thailand's crypto regulatory posture, continuing its trajectory as a crypto-friendly jurisdiction. We see similar developments in Indonesia as well, where its regulator is calling for the government to reconsider its digital asset tax rate. The regulatory agency urged stakeholders, including the Financial Services Authority and the Ministry of Finance, to take a look at the current tax structure. Crypto is currently being treated as commodities in the Southeast Asian nation, and is therefore subject to both VAT and income tax. Moving to Singapore, OKX, one of the world's largest crypto exchanges by trading volume, has secured in-principle approval for a major payments institution license from the MAS. The exchange can now provide digital payments tokens and cross-border money transfer services in Singapore. OKX has also applied for the VATP license in Hong Kong, seeking to gain approval for retail access in the Special Administrative Region. Speaking of Hong Kong, the HKMA has launched Phase 2 of the eHong Kong Dollar pilot program to further explore innovative use cases in Hong Kong on the wholesale CBDC sandbox to be built under Project Ensemble. The city has been exploring CBDC since 2017 and recently conducted a series of pilots on a retail-focused eHong Kong Dollar last summer. Those pilots actually accelerated the move towards privately issued, regulated stablecoins that are fiat reference. This phase 2 of the eHong Kong Dollar is now focused on how a wholesale CBDC can facilitate seamless interbank settlements of tokenized money, with Project Ensemble being the latest addition to HKMA's portfolios of projects in the space, including Project Enbridge, Project Dynamo, and Project Genesis. That's all for the week ending March 22nd. Until next time, keep innovating and keep demonstrating the transformational promise of Web3.